Good morning, ladies and gentlemen. My name is Reed Sawyer, Director of Information Services from Slade Centers. Now, my topic today is a little bit controversial. So let me go ahead and open it by just defining what I mean. Rental properties are a better inflation hedge than gold. I'm going to say, wait a second, Reed. I thought that gold was the best hedge against inflation of all time. Well, not quite. I was reading some reports this morning, and gold is primarily an investment. People put money into gold, and they hope that the price of gold is going to go up. But what they have found is that it's not really a perfect investment. It goes up, it goes down. It really depends upon the fear that people have of what is going on in the country. Which means that if inflation goes up, gold will hold its value, and it's great if you're going to have the economy go to heck in a handbasket, but it hasn't been a perfect indicator of inflation, which means that as inflation goes up, gold does not necessarily keep up with it. And if you take a look over the last 30, 40 years, what you have found is that gold has a tendency to lag behind because gold is not an investment and consumption item. People don't eat gold. They don't go ahead and use gold every day. There's some gold that's used in jewelry. There's some gold that is used in electronics. But generally, gold is just used for investment, and it's hoarded, and people take the gold and they put it in the bank, or they put it in a safety deposit box. What are the alternatives to gold? Well, you have the stock market, but the stock market and gold are perfect market items, which means that if I buy an ounce of gold, it doesn't matter how good a negotiator I am, I'm going to be getting the same price for gold as someone in Shanghai or someone in Singapore or someone in New Delhi, because it's a perfectly marketed material, and it is location non-specific, which means I can trade gold and I can have it shipped to me. I can have gold certificates. I don't have any control over the price of gold. Now let's compare that to real estate. Real estate is both an investment, and it has historically gone up and kept pace with inflation, as well as a consumption item, which means that people live in it. It is basic shelter. And so there's a need for that basic shelter. Now there are going to be occasions where, as the market goes wicky-wacky and people have overpaid for the price of housing, that it will go ahead and will adjust. But long term, you'll find that that real estate is a better investment than gold to go ahead and maintain your value. Because what happens if the market, what happens if the dollar goes down in value? People still need a place to live. And so, let's say the rent is $1,000 a month, you might drop the rent to $500 a month in order to go ahead and put tenants in there. Guess what? That's still $500 a month coming in. You have $100,000 worth of gold, and am I going to have anybody paying rent on that gold? Nope, I'm not. So with real estate, I have a positive cash flow. With gold, there is no cash flow unless I sell it, and then I'm diminishing the amount of gold that I have. So real estate is a better value than gold. Oh, excuse me. What about inflation? Let's say your market rent right now is $1,000 a month, and inflation goes up. Well, your costs to maintain that property are pretty much fixed. Your taxes and insurance can go up a little bit, but that's very, very slow to happen. And so your rent will go up to keep pace with inflation. And so your cost to maintain that property stays the same. Your cost to hold it maintains the same, but your dollar amount that you receive in goes up. What happens if you have stagflation where nothing happens? If you have the property that is financed, what will happen is that over time, you'll just start to pay down that mortgage. Now, that's assuming that you bought these properties at the right price, number one, and number two, that you weren't counting on inflation. Inflation is wonderful to have, but don't count on it. And number three, it has to have positive cash flow. If you have positive cash flow and you maintain it, the property will appreciate in value over time. What happens if the market corrects? Your relative value stays the same, because even if the market goes down, you're still going to be renting out this property. What happens if the house burns down? You have insurance, you go ahead and replace the house. So I want you to consider that real estate, rental real estate that has a positive cash flow is an excellent hedge against inflation. It's an excellent hedge against deflation. You will have positive cash flow and cash return while the property is appreciating, and you're going to have that positive cash flow each and every month as long as you have it rented. With gold, you're not going to have that positive cash flow. And so if you're looking for a proper investment, you want to contact the people at Slade Centers, 407-272-0873.